They sold part of it for 412 million. I'm going to say that again. They purchased it originally for 300, and they sold part of it. They sold 2/3 of it, 412 million. This isn't a business that commands a premium multiple. I don't know what is. Hello and welcome back to the Royalty King. Today we're going to be talking royalties, one that looks expensive and one that looks cheap. Top quality bottleneck, Altius Minerals. Guys, if you haven't already liked and subscribed to the channel, please do so. It helps certainly with the algorithm and helps me with the motivation in terms of putting something onto YouTube rather than just working with the paying audience at Substack and the consulting work and all the other stuff that I end up. So guys, let's take a look at today's focus. Altius Minerals, I've had a position in the company for a while. It's one of those, I wish I bought more at the time. I even discussed it with Uncle Rick, and for whatever reason, I didn't add to my position. I was too busy chasing probably gold royalties at the time. But anyway, Altius Minerals, super impressive company. Disclaimer, guys, of course, these are just my opinions. I'm documenting here, not advice at all. And I'm just some crazy guy on the internet. No qualification whatsoever as far as you're concerned. Executive summary. So Altius Minerals Corporation engages in the mineral and renewal royalties business and the project generation business. You guys remember I spoke with Keith from Latin Metals and we went over the project generation. It is project generation along with Bitcoin mining companies in a certain way. My number one focus at the moment right now. Everything else to me seems, I'm either well positioned and I'm chilling and relaxing. Everything else seems to be a little bit expensive. And I think that 2026 we might get a few wobbles throughout the year in terms of markets. Okay. It owns royalty and streaming interests, 11 operating mines already, covering copper, nickel, lithium, and potash, which is starting to catch a bid and catch people's attention, as well as iron ore. But I'm more interested in playing iron ore by two other royalties, which I'll share with you later next week. Copper and potash are the big ones for me at the moment. And I know, everyone that I've spoken to this year, last year, the year before that, and after that, they all say they're expensive. Royalties are expensive. But unfortunately, that has cost people from multi-bagging in the highest quality sector of the market. And so here's a really good example of an organically generated, let's call it, royalty. A prospect generator would consider this like the bread and butter of the business. So here is a case study. Altius purchased 1.5% net smelter through an exploration site back. I can't remember exactly when this was. It'll be in the company notes. For 300 grand. So there's a company out there staking a ground. They think they've found something. And Altius says, yeah, we'll buy the raw. If you find something, bring it to production. We'll buy a 1.5% of whatever goes through the smelter, a royalty on that. They come up with an agreement that's worth at the time 300,000. Because remember, it's not certain. There's a large degree of exploration risk and then development risk and then production risk. So Altius needs to be paid. They make a one-time cash consideration. And in success mode, let's take a look at the value of the cash flows that can return to Altius. So silicon gold has grown to more than 16 million ounces. Refer to resource table. This is in the presentation. To date, with strong continuing potential leverage, retaining half of the net smelter royalty. They sold part of it for $412 million. I'm going to say that again. They purchased it originally for 300 grand. Then they sold part of it. Okay. So they sold 2/3 of it, $412 million. If this isn't a business that commands a premium multiple, I don't know what is. So anyhow, continuing potential leverage, retaining a piece of the upside. So this is prospect generation inside an already big business that's Altius. So if this was your first project and you only had, I don't know, $1 million to explore and you bought a royalty, 300 grand, and then over time it comes into production, the value of the royalty obviously grows exponentially to 412 mil. You sell for a massive profit, but you keep this little ongoing royalty. And that's what I really like about the prospect generation or organic royalty business. So 15 producing royalties, you can see these on the website. You can search by producing, developed, and exploration. So they're really well set out. The largest holding, potash, they have the two royalties on two of the largest three potash producing projects in North America. Okay. And if I remember correctly, something like 2/3 of the US's potash is imported from these mines. Nutrien and Mosaic operate them. And so I think that's a wonderful, wonderful position to be in. If you look at the market caps of Nutrien and Mosaic, I haven't checked today, but you should go and do that listening to this. I'm pretty sure it'll be somewhere around like 50 billion. And so Altius at just a couple of billion valuation, remember that they've got interest in the two largest projects that these companies are operating, producing. And so they have exposure to that, but they do not have exposure to the same capital or operating expenses. I've run through and created a pie chart as to how much of their revenue is due to which commodity. Potash is roughly a quarter, and then base and battery metals. Okay, so obviously I'm really super interested in the copper aspect of that. It's super difficult. I don't know why, but it's difficult to get pure play royalty exposure on copper. And I think this is about as good as it gets. I spoke with Uncle Rick about it, and I should have been more aggressive back a couple of years ago when I started buying it. But anyway, you live and you learn. Quarterly, here's what the numbers have been doing from Q3 224 to Q3 in 2025. Okay, so as you can see, potash makes up a decent stack. What is that? Fourth, 25% of the revenue. Yeah, 26% above. Iron ore, not so much, but it's there. Renewable energy is a bit of a that's a bit of a wild card for me. I don't love it. What the company did was they actually spun out the renewable energy royalties they had into a different company. So in any case, base and battery metals make up most of it, followed by potash. Muriatic potash, what the hell is that? Well, we're just looking at the prices. You don't need to know exactly what it is. But if natural gas prices continue to rise, ammonium fertilizers, I would expect would also rise along with it, like we saw in 2022. Stands roughly $352 a ton, so it's 23% higher than last year, and obviously that would suggest a tightening supply relative to demand. And so if you have royalties on the two largest potash producing projects in North America, that's a wonderful place to be. Here are the producing assets. Again, you can see that on the website, so I don't need to belabor the point. Just thinking about it, like what if you could own a piece of, 90% of Canada's potash production, which, if I remember correctly, is roughly 2/3 of US demand because they import most of it. What's it worth to have a piece of that without spending a cent on production? Just food for thought. Again, just wanted to talk about how in-house they can look at exploration projects and take early stage royalties and have that grow, like we saw before, into an enormous monetized event later down the track. It was just really amazing. Once again, you're buying something for roughly 400K all in, including closing costs, and you sell it for more than 560 million. You can afford to wait a while if you're getting those types of paydays. In any case, another one, Kami royalty, $154 million partial exit versus $2 million cost of acquisition. Pretty amazing business to be in. It's gone up again since I put this guy out, guys. It's probably closer to 2 billion Canadian market cap. If you, as I mentioned before, compare that to Nutrien and Mosaic's market cap, I think you'll kind of juxtapose the two operating models, and I think it makes sense to be on the side of the royalties. Cash flow, it doesn't look too expensive, relatively speaking, for these types of things, of course, if you're looking at next 12 months market cap, the cash flows, but that's going to depend a lot on your projections for potash pricing. Okay. If you're looking at, if you just looked at this without really digging in and you saw the PE ratio, which is a bad way to value royalties, or if you saw EV to EBITDA, you just about have a heart attack, I think. Okay. This is why I like using FinChat. So it's an AI data center or data gatherer, I suppose you'd call it. And since inception, you can see the total return on the stock. Over the 1 year, you can sort by drawdowns. You can sort by all sorts of different things. Market cap, truly wonderful. Good margin to be in. Good margin business to be in. 45% free cash flow margins, much better than Nutrient and Mosaic, I can tell you that. And if you're looking at their return on equity, you can get a 5-year average as opposed to just a 3-year or rolling year average. So I like that about FinChat. Okay, guys, if you want to learn more, go over to the Substack where I'm going to break down all these from what I think they could be in terms of a valuation. And other than that, make sure you like and subscribe to the channel, and I look forward to catching up with you in another episode shortly. Take care.